Assalamualaikum warahmatullahi wabarakatuh. My name is Umar Hizbullah bin Karudin and my matric number is 1200716. Today I would like to present about the Islamic insurance, which is Takaful. As an introduction, the definition of Takaful. The word Takaful originates from the Arabic word kafala, which means guaranteeing each other or joint benefit or shared responsibility. Takaful is a cooperative system of reimbursement in care of loss paid to people and companies concerned about hazards, compensated out of a fund to which they agree to donate small regular contributions managed on behalf by a Takaful operator. Takaful is perceived as cooperative or mutual insurance, where members contribute a certain amount of money to a common pool. Commercial insurance is strictly disallowed for Muslims because it contains three harmful elements, which is the first one al-gharar, which is uncertainty, al-maisir, which is gambling, and last one riba, as we all know, is interest. The objective of the discussion is to determine the models of Takaful insurance, to examine the fundamental principles of Takaful insurance, and the last one to explore the Takaful life insurance policies' unique characteristics. The model of Takaful insurance. The first one is Mudarabah, Wakala, Hybrid, and Waqaf. Mudarabah, where the shareholders are sharing profits and losses with the policyholders. Wakala, which is received upfront from the contributions and transferred to shareholders fund. And hybrid, a combination of Mudarabah and Wakala. Waqaf, where part of the contributed capital is irredeemable. Next, we go to the fundamental principles of Takaful insurance. There are six fundamental principles of Takaful insurance. The first one is policyholders cooperate among themselves for their common interests. Next, policyholders' contributions are considered as donation to the fund pool. And next is every policyholder pays his subscription to help those who need assistance. And next one, losses are divided and liabilities spread according to the community pooling system. The fifth one, uncertainty is eliminated concerning subscription and compensation. And lastly, it does not derive any advantage at the cost of others. And the last part, we go to the Takaful life insurance policies' unique characteristic. They are unique in terms of underwriting and pricing, which is the amount of premium contribution varies from policyholder to policyholder, depending primarily on the amount that each person targets to accumulate at the end of the policy period. The policyholder may be subject to a minimum entry age of the insured life as well as a minimum payment of each installment. The insurer may consider age, gender, health, and other socio-demographic factors allowed in the jurisdiction of underwriting. Next one is in terms of beneficiaries. Eligible beneficiaries in Takaful life insurance are restricted to the heirs of the deceased insured, and they are also unique in the causes of death. In order to claim death benefits, the beneficiary needs only proof of death, the cause of death, whether natural, accidental, or unlawful, or all this matter very little. Muslims believe that death is deemed to be the will of Allah. Therefore, even in the event of suicide, the right and claims of the surviving family members cannot be ignored. And the next one, they are unique characteristic in terms of death benefits. The heirs are entitled to a fair share of the balance in the special account, where the balance refers to the estimated net profit in the account all others being equal, those heirs in a financially destitute situation get a greater amount than wealthier heirs. Next one, unique characteristic in terms of maturity benefit. When the insured survives the protection period, the insurer returns all the money in his or her individual account plus a fair share of the surplus in the special account. Next one, in terms of policy surrender, when an insured wishes to surrender his or her policy, the insurer returns him or her what has been accumulated in the individual account. No refund is usually made from the special account. And the last one, the unique characteristic of Takaful life insurance policies is surplus distribution. Takafuls have to be mindful about the management of surplus arise in well-positioned Takaful operations. Yet, in practice, the management of surplus differs significantly from one country to another and among different Takaful firms in the same country. This absence of uniform standards cause challenges in accounting for and observing Takaful business. So, in the conclusion, risk sharing and mutual aid are encouraged in the Takaful sector. As a result, Takaful is now being used as an alternative to traditional insurance. The advancement of Takaful, on the other hand, is contingent on a variety of difficulty addressed by various Islamic scholars. Before Takaful insurance may grow globally, such difficulties must be addressed. So that's all from me. Thank you.